After 2 years of COVID-led disruptions, the hotel industry is finally witnessing strong demand offtake. Business and corporate demand have gained significant momentum, and resurgence of international travel would only make it stronger. Demand-supply dynamics in the hotel industry are expected to remain favorable over the next few years. Supply is expected to remain constrained as a lot of small players were badly hit by COVID-19. They shut their operations, and new supply will take some more time to come up. Demand is expected to remain strong over the next few years. IHCL, with strong brand and parentage, varied product offerings, and a robust balance sheet, is well placed to gain from the industry uptrend. Its stock has performed phenomenally, gaining 50% since the start of 2022 versus a flattish performance by Nifty 50. The outperformance can be attributed to the end of COVID restrictions and result in strong performance by IHCL. With the industry uptrend, strong market positioning and margin improvement, IHCL is on course to deliver better earnings going forward. Its MD aptly put in a recent media interview that the best is yet to come. IHCL revenues were up 45% QoQ compared to pre-COVID quarter, which is Q1 of FY20. Revenues were up 24%. Enterprise level occupancy improved to 65.2% in Q1 FY23 compared to 61.8% in Q1 FY20. Average room rates improved about 32% in Q1 FY23 compared to Q1 FY20. IHCL's RevPAR, which is revenue per available room, improved about 40%, coming in at 5,424 rupees versus Q1 FY20. Domestic hotels outperformed with the RevPAR at 142% of pre-COVID quarter. Domestic RevPAR growth was better than the industry. International business lagged, with RevPAR reaching near pre-COVID quarter, which is 98% of Q1 FY20. While leisure demand remains strong domestically, business and corporate demand has gained significant traction. IHCL's business-centric properties in Delhi, Mumbai and Bengaluru witnessed sharp pickup in demand. Operating margins improved by about 1,300 bips compared to pre-COVID quarter and were up nearly 1,200 bips QoQ. Improved cost structure as well as strong operating leverage due to robust revenue growth drove strong margin improvement. IHCL's Q1 FY23 margins were the best ever first quarter margins. It posted a record profit of 170 crores in June quarter, generating cash flow from operations worth 348 crore. IHCL says that the robust demand witnessed in Q1 FY23 continues even in the current quarter. Given the current on-ground demand and bookings, IHCL says the strong momentum has not dropped, although Q2 is usually a softer quarter compared to Q1. IHCL expects revenue in the current quarter to be close to Q1 levels. Another important trigger would be the strong resurgence in international travel that's expected in second half of this fiscal after 2 years of little activity owing to COVID-19. IHCL is popular among foreign tourists given its brand recall, exotic locations and high levels of service. As per IHCL, demand for foreign tourists accounted for 15% of revenue pre-COVID, and it expects strong comeback of this demand in the second half of this fiscal. Given the robust demand scenario, IHCL plans to add room inventory. It aims to open about 18 hotels this fiscal, 4 hotels of which are already operational. IHCL has a strong inventory pipeline of 8,107 rooms, which is about 40% of the current operational inventory and about 28% of the total inventory. It continues to focus on the asset-light approach and aims to reach a 50-50 mix between owned, leased and hotels run under the management contract route. IHCL is scaling up Qmin business. Within 2 years of launch, Qmin has achieved the 100 crore revenue milestone, reaching 15 outlets with 3 food trucks and covering 20 cities. Apart from opening kitchens in new cities, Qmin Kitchen would also be opened in Ginger chain of hotels for servicing day meals. IHCL expects to reach annual revenue of 100 crore for Qmin over the next 3-4 years. It's also ramping up amã business with an aim to open about 500 amã stays by 2025 compared to the current count of 50. IHCL is also enhancing its chambers business, which currently has about 2,500 members. IHCL has significantly reduced its cost structure compared to pre-COVID levels. The company has optimized employee costs and reduced power and fuel expenses. It reported its best ever Q1 margin. It came in with an EBITDA margin of 31.3% in the June quarter. As the business improves in the second half, margins are set to improve further. Also, the new businesses which the company is ramping up have higher EBITDA margins of about 35%. IHCL is well on track to reach 33% EBITDA margins by 2025. At the current market price, the stock is trading at an EV to EBITDA of about 20 times its FY24 estimates. Now, given the hotel sector upcycle, earnings estimate as well as the valuation multiples can definitely re-rate.